Tesla stock's going to likely get hammered this week, folks. I'm going to take you through in today's video why I believe Tesla stock's going to get hammered in a massive, massive way. If you didn't know, Tesla has earnings this week. They are on Wednesday after the bell. And, I want to speak about a lot in this video. I want to speak about why I believe the stock's going to likely get hammered this week. I want to talk about the lower probability that the stock actually goes up substantially and what would have to happen for the stock price to actually go up substantially. Obviously, it's a pretty big position for me, over $400,000 worth of shares I have in the public count. We're going to speak about, am I going to sell some of these shares, being that I think the stock could likely get hammered this week and go ahead and buy back later in the week. We'll talk about, am I planning to hedge against my shares, anything like that. In regards to me and kind of my history with Tesla, obviously I kind of saw the vision before, a lot of people did, and I bought a lot of shares. This is, I don't even have that many shares anymore, like 1,665 shares compared to the amount of shares I had a couple of years ago. This is a very small number. But nonetheless, I do hold these shares for the long term, and I'm a huge believer, obviously, in Tesla. And we'll speak about the long term. And Tesla's actually playing a lot of games right now that are going to benefit them massively in the long term, that are hurting them substantially in the short term, though. But in regards to Tesla, I saw the vision before most people, and then I also saw the kind of downfall in margins and profitability coming before a lot of people really had seen that. A lot of people went into 2022 extremely bullish on Tesla. I went in very cautious. I actually took most of my profits before that, and the reason being is I understood what the Fed was about to do, and that was going to put insane pressure on basically anybody that sells higher ticket products, a la vehicles, homes, furniture, things that people have to buy on loans, right? And then last year, at the very end of the year, actually in December, I started buying some Tesla shares again. And in January, I started buying some Tesla shares again for the first time in years. And that was why a lot of other people were talking about, oh, Tesla's going to $50 a share. Tesla's going to $60 a share. And I was just like, no, it's not. Like, you guys are just wrong. And so if there's one stock I've really been let's just call it on with, it's been Tesla over time. And so, just in kind of understanding what's going on with the business model before a lot of other people just understand what's really going on. So we're going to go through that. Got a lot to go through in today's video. I appreciate everybody joining me. There's a reason I'm sitting down for this video, because it's a beast and there's a lot to get through. So grab yourself a drink and let's just go. I appreciate y'all joining me. And by the way, I hope everybody appreciates me giving a viewpoint like this on a stock that I hold a ton of shares in, right? Because it's very easy that I could just go out here and say, oh, Tesla's going to fly to the moon, it's going to skyrocket, and all these sorts of things, just because I hold a lot of shares. But I actually believe the company's having a lot of problems in the short term, and I've got to share a lot of that with you in today's video. So I hope you guys appreciate that. If you do at least appreciate that and respect that, share that with me in the comment section, okay? So, alrighty, getting off right off the bat here, okay? So, obviously, Tesla has dropped price significantly on their whole lineup, basically in the past year or so. If you go back 12, 18 months ago, every single one of their vehicles was significantly a higher price than it is today. We're talking $10,000, if not tens of thousands of dollars on pretty much their entire lineup if we go back 12 to 18 months ago. Now, the great thing for Tesla is they are able to achieve some cost savings and synergies over time that can help out, let's call it, even out a little bit of the cost reduction they've done, but there's no way they could even come close to bringing down costs as much in the last 12 to 18 months as their vehicles have basically been brought down, which means essentially your margins are going to get hit in quite a significant manner. Now, in regards to all these huge price drops, which once again, this has been around the world. Around the world, they've been dropping significantly time and time again, in basically every single market out there, right? And if we look at some of this pricing now at this point in time, it's getting to absurd levels, okay? Absolutely absurd levels. The Model 3, you can get a Model 3 now, rear wheel drive, right? This is a shocking number, $28,490 when you factor in the federal tax credit and when you factor in your gas savings, which obviously is immense amount of gas savings versus, electric, right? Especially if you live in markets like LA, where you're having to pay $5, $6, $7 a gallon for gas. It's out of this world, right? And so this is just an absurd number. You're talking about one of the most advanced vehicles literally in the world, other than the Model S and Model X. Model 3 is one of the most advanced vehicles in the entire world for less than $30,000. If you take into account the possible savings, that's a shocking number. Now, let's say you take off the tax credit, take off all the gas savings and all that, right? It's still a pretty crazy number, folks. $38,990 for a Model 3, and that's before the crazy big tax credit, $7,500. That's before all your gas savings and things like that. That's an incredibly low number for that vehicle, arguably one of the best vehicles in the world, one of the most advanced vehicles in the entire world. For that price is crazy, folks. This is what we're dealing with right now, right? The Model Y is almost just as insane. Remember, this is an SUV we're talking about now, right? An SUV that if you factor in the federal tax credit and gas savings, you're at $32,890. What? Look at that. A $399 a month lease is your estimated lease payment, right? $299 if you factor in all the potential savings there. What? Like that's insane for one of the most advanced vehicles in the entire world. Like crazy. I mean, absolutely crazingly shocking numbers, right? If you take off the tax credit and gas savings, you're looking at less than $44,000 for an entry-level Model Y. Incredible. I mean, it's unparalleled value you're getting from Tesla at this point in time, folks, okay? The moral of this story is you do not, I repeat, you do not want to compete with Tesla right now. It is brutal if you're another automaker because you're having to compete against them selling these vehicles at these sorts of prices. I would not want to compete with these guys over the next few years, okay? And if you want to buy a new car, get a Model 3 or get a Model Y because the value there is ridiculous, especially in this inflationary environment that we've been going through the last couple of years. Like to get those sorts of pricing is absolutely insane. I mean, absolutely insane, right? Now, we got some problems, okay? And these problems aren't over and they're actually going to get worse before they get better, okay? Tesla's gross margins have been starting to fall considerably. Now, what I'm showing you here right now is a trailing 12-month gross margin. So this really looks at the last 12 months, kind of averages it out over time. And clearly there's a big fall, but I don't think that's the best way of looking at it. I don't think you should really look at it on a trailing 12-month. I think you need to look at it on quarter by quarter for Tesla right now and see how much damage is really being done and how much damage is still to come, okay? So Tesla went through this beautiful period, and this is one of many reasons the stock price boomed for several years, is their margins just kept getting better and better. This is gross margins, 19%, 21%, 24%, 26%, 27%, and then all the way up to 29%, right? I mean, it was incredible. Incredible. And that's why so many people obviously started buying into Tesla stock like insane back in either 2020, 2021, or even the beginning part of 2022, right? But then something happened and margins started to slip. We went from 29% down to 25%. Then we held steady at 25%. A lot of people think, oh, the margins have bottomed. We're going to hold steady at 25. Nope. Then we went down to 23.7%. Then we broke under 20%, down to 19.3. Last quarter was 18.19% margin. I do not believe margins have bottomed yet. I believe we're getting closer, much closer to margins bottoming, but I do not believe we've actually reached margin bottoms yet. And that's one of the scary things is like, where do these margins bottom? Is it at 17%, 16, 14, 13, 12? That's what a lot of people are wondering. It is a clear trend, and that's margins are going down, okay? Once again, the good news is we're probably getting a little closer. Now, this is why, okay? Let's just call it what it is. The Fed raised rates at the fastest clip we've pretty much ever seen the Federal Reserve raise at, right? And so if you want to go to get an auto loan now at this point in time, or basically any loan for that matter, the cost of doing business has gone up greatly for you, right? I mean, I don't ever remember seeing a chart that looked like that. This is interest rates on a 16-month new car loan in the United States of America. I don't ever remember it being like that. I mean, this is a normal chart, like, you're going to see some fluctuations up, fluctuations down, right? In terms of the interest rate you would have to pay. But we've never really seen it where it just went parabolic like that. And that's essentially exactly what happened. And this is a reason Tesla's having to be so aggressive. I mean, absolutely insanely aggressive with their margins. Because the bottom line is, if interest rates are just a lot, higher, you're not going to be able to potentially purchase that vehicle you want it. Or if you want to purchase it, like, you can't afford it, right? Because you can't afford the payment because now your interest rate's substantially higher. Or other people are just kind of like, I'll wait till interest rates drop or something like that. Now, Elon's doing something. Elon Musk and the team is doing something very interesting that no other automaker is doing right now, which is just another reason why Tesla's going to put all these guys in the grave, okay? Elon has this company in survival mode right now. Now, does Tesla need to be in survival mode? The answer to that is absolutely not. Tesla has the best balance sheet in the world for all the automakers, okay, by far and away the best balance sheet. They still have incredible margins, even if their margins are going down. They're still incredible compared to most of the auto sector. So Elon doesn't even have to be in survival mode right now. But he has Tesla literally in survival mode right now, okay? And he basically clicked this mode on back in 2022, back in early 2022, right? And all the other automakers are not taking this time period serious. Elon Musk is taking this time period extremely serious, which is why he dropped price again and again and again and again and is killing the company's margins right now because he views like this is a time of survival. We need to be in survival mode. And all these other automakers are not in survival mode. And how do I know other automakers aren't in survival mode other than just a hunch or just like, that's my belief? The numbers always tell the truth, okay? And here's what we're looking at. Here's Ford's margins, okay? Ford, they just had the third highest margin in their last quarter they reported. Basically in the past 3 years, folks, in the past 3 years, they had a margin of 16.65%. That was compared to the previous quarter, which was 11%. Previous quarter was 14%. Previous quarter before that was 12%, okay? So you're looking at Ford that's like taking margin, okay? They're not taking this stuff serious, what's going on right now, this interest rate environment. They're like, we're going to continue to have really strong margins. Toyota, who should be one of the most worried companies in the world when it comes to Tesla. Why should they be so worried about Tesla? Tesla's coming for the 10 million vehicles a year, 15 million vehicles a year. So companies like Toyota and VW, they need to worry more than anybody because that's who Tesla's coming for. Tesla's not coming for BMW and Mercedes and Audi like people used to talk about 5, 7, 8 years ago. Tesla nowadays is coming for Toyota. They're coming for Volkswagen, okay? And these guys should be very worried, and they're just not worried at all. They're like just in la la land right now. Toyota's just had its best margins in the last quarter that we've really seen in any recent time period from Toyota. Look at Toyota's margins here, folks. 12.4% they just reported in their last quarter, right? The previous quarter before that was 5.7%. The previous quarter before that was 7%. Previous quarter before that was 4.7%. In this same quarter last year that they just reported was 8.6%. So if anything, Toyota's taking margin right now. And a lot of these automakers have used this last year as like, oh, everything's gone up in price. We need to go up in price. And Tesla's doing the exact opposite, folks. You want to see what's going on with Volkswagen? Here's what's going on with VW, okay? Check this out. VW has held their margins incredibly steady, folks. Between 19, let's call it 17 and 20% for the last 6 quarters. In their last quarter, they just reported 19.6%. So VW is basically like, we're just going to keep taking margin, keep keeping our margin. And that's not a smart move, folks. This is a very, very, very bad move. See, these other auto manufacturers, they don't understand the game that Tesla's playing, okay? And these other auto manufacturers are putting themselves in their own casket. They're digging their own graves, and they just don't realize it right now, okay? Tesla's taking all this margins down in their company, right, and being ultra aggressive in a time period when all these other auto manufacturers are in la la land. And now these other auto manufacturers are basically starting to be known by consumers as the expensive vehicles, but without the quality that you'd expect, and without the, all the features and everything you get with a Tesla. Like Tesla's technology is unparalleled in the marketplace. There's no one else that is even close to their level, to be quite frank. Okay, across the board, as somebody that's driven, internal combustion engine cars for 100 years, I couldn't even dream of trading in my Teslas because it's just like they're so far ahead of like the technology of every other auto manufacturer out there. So these other auto manufacturers are basically sending an inferior product versus Tesla, and they're sending it at higher prices than Tesla. You want to talk about how to dig yourself your own grave? Do that in business. Send an inferior product for a higher dollar amount and watch where you're going to end up, in the freaking casket, okay? And so Toyota, VW, and Ford, they're all ending up in the casket. And this is one of the worst scenarios that can possibly happen because now EVs are starting to boom, right? Traditional auto never took EVs serious for the longest time. They were asleep on this whole industry. A lot of them weren't even convinced EVs were the wave of the future. They're like, whatever, we're focused on what we're focused on, right? Meanwhile, Tesla was investing aggressively in the Supercharger Network, in their technology, their battery technology, their self-driving vehicle capabilities, everything like that, right? And traditional auto is like, we don't care about any of that. All of a sudden, something happened in the fourth quarter of 2018. And that was a moment when every single traditional auto manufacturer started paying attention. That was the moment. Because basically what happened in that quarter is there was over 100,000 EVs sold in a quarter. Okay? That put EVs finally on the radar, and then after that, over the next couple of years, all of a sudden, every traditional auto manufacturer is like, oh, we're going to invest this amount of money and this amount of money in EVs. But meanwhile, they're already a decade behind. You're already a decade behind. You're playing catch up from what Tesla was doing 10 years ago. And these guys haven't even caught up to what Tesla was doing 10 years ago. And now everybody's, let's call it, pooping their pants in regards to all these traditional auto manufacturers, because EVs are just getting bigger and bigger, and the market share is getting more and more and more. And these other companies, these other traditional auto manufacturers, they're in the worst scenario. And if you really want to know why they're trying to take as much margin as they possibly can now, I'll explain that to you. The reason they're doing that is because they understand that they're losing a fortune on anything they're doing EV related. They're spending a ton of money and they're losing a ton of money. No one's making money from EVs other than Tesla. Let that sink in for a moment. So all these guys are spending all this money, so they really have no choice but to try to make as much from their internal combustion engine vehicles right now as they possibly can. But the problem with that is they're sending, once again, an inferior product to the market at a higher dollar amount, which is going to be brand ruining for them over this next several years, essentially. As everybody starts to become accustomed to, oh, Tesla has the premium product at the best price, that's where I need to move to, right? So they're doing this whole game completely wrong. And plus they're dealing with the dealership network at the same time, which is a complete nightmare, because the dealerships don't want to sell these freaking EVs. And also, the dealerships can't sell these EVs they're trying to sell, because no one wants these EVs from these other companies, because they're still seen as like inferior products to like a Tesla. And so if you're going to get an EV, you're going to get a Tesla. And that's where you get in a lot of trouble here, folks, okay? Now, meanwhile, you're already seeing this all play out, right? Look at all the companies that just this year are partnering with Tesla to use their Supercharger network, right? Tesla's a decade ahead of all these guys, and these guys are realizing, crap, we can't catch up with them. We can't catch up with them. So a lot of them are just kind of, let's call it punting the ball, and basically just trying to take as much margin and get as much for their shareholders now as they possibly can, which is, once again, just going to dig these guys a casket. But the CEOs and the executives of these traditional audio manufacturers, they don't really care where these companies are in 5 or 10 or 15 years from now. If they're in a casket, those guys are going to be long gone by then anyways, right? A lot of these folks that run these auto manufacturers are people in their 60s, 50, 60, 70 years old. Look at all the different CEOs of public companies. Tell me their ages, okay? They're not thinking about the next 20 years when it comes to these. They're thinking about the next year. They're thinking about the next quarter. These guys aren't even going to be the CEOs of these companies. All these, auto manufacturer CEOs you see today, none of them are going to be the CEOs in the future. Keep that in mind, okay? All the people that are on the board of directors, for the most part, of all these big auto manufacturers, are not going to be the same people on the board of directors even in 5 or 10 years from now. So they're focused on today, whereas Tesla's always been focused on 10 years from now, right? And I think the Supercharger Network is just another example of what Tesla's really up to in their long-term game plan here, right? And, it's interesting, Tesla has this on their webpage, host a Supercharger. Could you imagine how many businesses are applying consistently to become a host of a Supercharger? Because it brings you so much freaking business, it's not even funny. I'll give you a couple examples. I live in Vegas. Whenever I go out to Southern California, LA, San Diego, wherever, right? I always stop at this place called Eddie's World. And the reason being is I supercharge there. And so it's an opportunity to go to the bathroom, and I ended up spending, next thing you know, 10, 20, 30 bucks in this Eddie's World. And that I never stop at that Eddie's World, I could tell you, if it wasn't for the superchargers there. But because the superchargers are there, they always make money off me. And all those people that drive all those Teslas, they got superchargers all down here, and they even got a few over here nowadays at that Eddie's World. All those people I always see get out of their cars, go in and start buying stuff from Eddie's World. So just like, that's a great example, right? This Carl's Jr. in Kingman, Arizona, if I ever go out to Arizona, I have to stop at this Carl's Jr. I would never freaking even go to Carl's Jr. But we have to stop at this Carl's Jr. because that's got a superchargers in it, right? And next thing you know, we end up ordering some food. By the way, that Carl's Jr. is actually good out there in Kingman, Arizona. It's a random place, but they actually have good customer service and actually good quality hot food there. But I would never stop at that Carl's Jr., but but they got superchargers there. So this just gets into, again, like Tesla's competitive advantages, right? Now, we got to talk about the bad, okay? So that gives you kind of a picture of the long term and what's going on with Tesla and how a lot of these things that are going against Tesla right now and that are going to hurt the stock price and have been hurting the stock price and margins. Yes, we have a lot of things going for us long term, but damn it, we got problems short term, okay? First off, Tesla just missed their quarterly estimates for deliveries, right? A couple weeks ago, or, it was probably less than a couple weeks ago. And the numbers were, I'll just be honest, this was kind of like worst case scenario. Because the company reported 435,000 deliveries, 435,000 deliveries. The problem was analysts were expecting 459,000, so they missed the average analyst estimate considerably. But that wasn't the worst part. The worst part was they missed the lowest expectations. The lowest expectations for deliveries were 442,000. So when even like the lowest, most bearish person, when you miss the most bearish person's numbers, that means things are really bad in your business model right now, okay? Really bad. If the guy that's the most bearish, even you miss his numbers, no, okay, that's not something you want to have going on. And if you understand anything about, producing vehicles, right, and running a factory or anything like that, it's all about as many as possible, scale, scale, scale. You need things running, like the more you can overproduce, the better off you are usually in this business, right? If you're talking about slower volumes, it means less scale, it means less margins. Tesla, one of the reasons Tesla got to such high margins wasn't just because of the prices they were charging, a year and a half ago. It was also for the fact that those facilities were maxed out production and they were just pumping them out left and right, nonstop Teslas. If you start talking about you're slowing things down a bit, it weighs on your margins, it weighs on your profitability. Also, there's a lot of things going on behind the scenes that I'm hearing that I'm just like, what the hell is Tesla doing here, okay? Give you an example. A friend of mine, this was about 3 weeks ago. They said they ordered their dad a Model 3, okay? All right. So this friend tells me they ordered their dad a Model 3. They're buying it for their dad. That's awesome. Good story, right? But the problem is the Model 3 they ordered for their dad, Tesla calls them shortly after, and they say, hey, we have one we can give you now that's already been produced. And I believe he said it was $3,000 cheaper. It's like a $3,000 discount they gave. And I was like, what? I was like, they must have been something different. There must have been something different with the wheels. He's like, nope, it was the same exact everything. And they gave it to me for a $3,000. I'm like, this is so stupid. Like, are you kidding me? Like, I understand Tesla just has Teslas laying around, so they want to get rid of them, and maybe they want to meet some sort of quarterly number, even though they still didn't meet that number, by the way, because maybe I think it was at the end of September, so maybe they wanted to try to get it in before. I don't know. That was a waste of time because they still didn't hit their numbers. So, but I'm like, that's so dumb. Like, $3,000 is like everything when it comes to these Teslas. And that's a huge portion of your margins you just zapped away. And I'm like, how many stories of that could we be hearing right now where Tesla's making some questionable decisions? And I'm kind of like, who made that decision to give a several $1,000 discount for the same exact vehicle? Like, that's questionable, right? That just seems like not the smartest business decision. That sounds like we're just going to try to meet numbers. And so you got stuff like that going on. And then on top of that, we're starting to have inventory pile up, folks. I'll just be honest with you. And this shows you that there's clear demand weakness right now because of the interest rate environment we're in. And also, consumers have been sliced and diced by inflation for 2 years, right? This is just in the Las Vegas metropolitan area. This is all brand new inventory of Model 3s Tesla has. They never used to have just all these freaking Model 3s just laying around here in Vegas. And I kind of do wonder, are they even putting them all on the website? I was considering that as well. It's like, I wonder if there's a bunch more they have that they're just not putting on the website. The much worse thing is Model Ys. I'm looking at the inventory of new inventory of Model Ys in Vegas. I'm like, oh my gosh, look at all these freaking Model Ys. There's this page of Model Ys. There's this page of Model Ys. This is all just in Vegas, okay? There's this page of Model Ys here. There's this page of Model Ys here. I'm like, what? There's this page of Model Ys here. These are all brand new Model Ys that are just sitting around collecting dust that they overproduced and now they're hoping to sell. There's this page of Model Ys. I'm like, does it ever freaking end? This is just Vegas, folks, okay? There's this page of Model Ys. I'm like, no. This is not good, folks. This is not good, okay? This is not a bullish indicator. Anybody that tries to shift that, you don't understand Tesla's business model if you think that's bullish, okay? That's not bullish. That level of inventory just in Vegas, and from what I'm hearing, it's across the United States. You could go to many big cities and you'll find just stacked up inventory of threes and especially Ys, okay? Stacked up inventory. Not good. Not good, okay? Now, in regards to Tesla, there's absolutely no more FOMO in regards to Tesla's product, right? A year and a half ago, 2 years ago, there was a lot of FOMO actually in Tesla's product. And the reason was prices actually kept going up. Elon kept raising the prices and the team kept raising the prices, right? And inventory was like non-existent. Like you couldn't find just like Model Ys laying around and Model 3s 18 months ago. That was not a thing. Now, every single time, Teslas are being devalued and devalued and devalued because they keep lowering price time and time again. So everybody that's been buying Model 3s and Model Ys, like, what the hell did I even buy it for? I should have waited 3 months. They would have lowered price and lowered price again. And I'm sure you got some consumers out there like, I'm not going to buy one yet because they're just going to keep lowering price. That's all they keep doing. So why wouldn't they, right? And inventory keeps piling up. If inventory keeps piling up, that gives them even more incentive to cut price. So there's no fear of missing out on Teslas now at this point in time. And I mean zero. Like Robert De Niro when he was in, not Last Action Hero, he was never in that movie. Now, if we go through the numbers here, okay, this is problematic. So, analysts had the company doing 75 cents of EPS in this quarter they're about to report, which is down about 30% year over year. I'm not even so convinced they're going to be able to hit that number, to be honest. When I think about missing the estimates for vehicles, when I think about how many price decreases they've had, right? When I think about all the inventory sitting around and these questionable decisions they're making where, hey, we'll sell you this car for $3,000 cheaper. It's the same as the one as you ordered, just we'll deliver it now. Like stuff like that. I'm a little concerned if these numbers are going to be hit over this next few quarters. This quarter we're in, next quarter as well. In the following quarter, which Q1 2024, actually the company's supposed to have a nice increase in earnings per share of about 13.6%. I don't know. I'm not the most confident in that. Let's just put it that way, especially if interest rates are to go up any more substantially than they've already gone up, right? Now, if we look at revenue expectations, folks, so 13% growth in this current quarter, only 9% expected in Q4, which is an embarrassing number for Tesla. Tesla, you should expect usually 30 to 50% growth for Tesla. We start talking about single digits, like for Tesla, that's just, to put it quite frankly, that's a disaster, folks. Now, in Q1 2024, likely because Cybertruck should start hitting, we're expected to have 21% revenue growth for the company overall. So, I mean, the numbers are bad across the board, but who knows if those numbers will even be hit. That's the scariest part, folks, because you got to understand, all these deliveries that are happening in these quarters now, or they're reporting, are all at much less prices than what Tesla was selling these same vehicles at a year ago or a year and a half ago, right? In these same quarters. That's trouble. So I have real question marks about margins, real question marks about earnings per share, and real questions about revenue overall. And if these numbers are even going to be hit, which these numbers aren't even good. 30% down roughly, EPS is not good. Tesla growing 9% in a quarter or 13% is horrible. Horrible, to be quite frank. But that's kind of what we're dealing with here. And I even actually am a little concerned, folks. I'm a little concerned about Tesla's revenues going negative. A little concerned. I've seen it before. It's happened before. I'm a little concerned about this, folks. Okay. Now, with that being said, Cybertruck should be the saving grace of the company. Okay. But we have a little problem here with Cybertruck. Okay. The problem is with Cybertruck, there's something going on with why production's taking longer than expected. I can tell you that. Elon would already have these Cybertrucks being produced in mass if there wasn't some sort of issues. There's issues, okay? I don't know what it is. It might be multiple things, but there's some sort of issues in production, and that's why this vehicle is taking longer. Because believe me, I saw with Model Y. Model Y, he started to ramp that product much more quickly than anybody anticipated. Model 3 numbers are starting to wane a bit. Company needed a recharge, and he started producing Model Y. But Model Y was very similar to Model 3. It was just a little bigger and a few little things here different. Cybertruck's a completely different model, obviously, right? In how you produce that. So there's some sort of problems going on there. I can guarantee you that, okay? And the problem is Cybertruck going to likely be a drag on earnings per share and margins for the next couple quarters, for the next 2 to 3 quarters. Now, the Cybertruck should help out immensely revenue and earnings per share in the second half of 2024. And I mean a substantial way, okay? But that seems like a million years away as of right now, right? That's still a ways to go. And a lot of people are also concerned about Cybertruck's going to steal sales away from Model Ys and Model 3s. I don't know. We'll see how all that plays out. I don't want to draw any conclusions about, oh, people aren't going to buy Model 3s or Model Ys as much because they're going to buy Cybertrucks. I don't know, okay? We'll see how all that plays out. I usually look at these things as kind of a net benefit, okay? Now, so in regards to the stock price, okay? So the stock price should likely get hit. It should get hit pretty hard, I would expect, okay? And here's how this would happen. And I would put this at about a 70% probability this happens, okay? If margins come in worse than expected, revenue comes in worse than expected, earnings per share comes in worse than expected, Elon sounds a little bearish on the conference call, we're likely taking this baby under $200, okay? Are we taking it to $50? I don't think so, okay? All things are possible in the stock market, but yeah, I think that ship sailed now at this point in time. But could we take Tesla under 200? Absolutely, which would be a pretty substantial fall from here with the stock trading at 250 plus, right? But you got to understand, like, Tesla's an extremely volatile stock. So, you know, for Tesla to go from 250 to 200 isn't the craziest thing in the world, right? Not at all. And, you know, next up, let's talk about the bull case, okay? There's a bull case. I would call this like a 30% probability, maybe a 25% probability, to be honest. It's a much lower probability than the under 200 scenario. But this would be the bull case where we end the year over 300. What would have to happen? Elon and the team would basically have to say, margins are done going down. This is the bottom, and we only go up from here. If they were to say that, that would be extremely bullish for the stock, because then that takes the whole margin profitability, the erosion in margins and the erosion in net income and erosion in revenues. Remember, if you keep bringing down the price of your vehicle more and more and more, right? Gosh, you need to start selling more and more of those vehicles to just make up for that difference, which is not easy to do, right? Especially if you're in a lower demand environment, given that interest rates are where they're at. So if Elon and the team was to say margins have bottomed here, and they're also to talk in detail about how Cybertruck could be extremely helpful to margins, and how this is going to be a huge help in 24 for margins, and why the Cybertruck is going to be extremely profitable. If they were to talk in detail on the conference call, that would be extremely bullish. And then that would build a lot of bullish momentum in the stock, because then the analyst community would start coming out and saying Tesla's margins have bottomed. The company said they bottomed. It's only getting better from here. All the worries about margins can go away. Cybertruck's going to be super helpful to margins. And then it just starts to like a bullish momentum. So that's a potential, but it's a lower potential. Now, on top of the company saying that, you would need people to believe it, okay? Because it's one thing for, you know, because Elon said a lot of things over time, and not everything obviously comes to fruition, right? Or comes to fruition, but like many years later than he kind of expected. So you need them to say that, and you need everybody to believe it. Like, yeah, they said it, and we believe it. So if they say it and everybody believes it, then we could maybe be like $300 year end or something like that, okay? But once again, that's the lower possibility. So don't get your hopes up too much about that scenario. But it is a potential, and you always have to take into all potentials into account when you're in the market, right? Now, next question is, will I sell some of my shares and buy them back, given that I think the much higher probabilities the stock goes down significantly, right? And the answer to that is absolutely not, okay? Absolutely not. I mean, just at the end of the day, like, to try to play that sort of trading game, like, I think the stock's going to go down for X, Y, it's silly. I'm not looking to play that game of, like, I'm going to sell some shares and I'm going to buy my shares back. And no, okay, because then you get into more, like, trading type moves. And the problem is you go through a slippery slope when it comes to trading, where once you start, as an investor, once you start viewing the market in kind of a trading lens and starting to make financial decisions, it's one thing to have an opinion, like, I think the stock's probably going to go down or up. It's one thing to have an opinion, but you reach a slippery slope if you start actually making financial decisions based upon short-term things you think are going to happen in the market or with stocks, going on a slippery slope to then you continue to do that and continue to do that. And if you're right, so let's say I'm right, and let's say I sold out of my a bunch of Tesla shares, say $100,000 worth of shares, and I'm right, stock gets hammered, I buy those shares back at $215 or something like that, then I'm even incentivized more to do that in the future. And then you start thinking you're smarter than you are, and you can predict all these short-term moves in stocks, and you're making financial decisions based upon that. Not a good decision. Not in my opinion, at least, okay? And so that's why I'm like, to try to sell them. Like if I want to sell Tesla shares, it'd be because I felt like the company had peaked, or because like there's just way better places for my money or something like that. And that's from a longer term view, not a shorter term view. And obviously I'm extremely bullish on Tesla long term. So to try to play this kind of short term game of getting in, getting out, not for me, not my cup of tea. Okay. Now the question is, will I hedge? Now this is where things get interesting. That is a potential. I am looking for another hedge for 2024. Okay. So especially if the stock was up on Monday, Tuesday, and Wednesday, I could potentially do some sort of hedge around Tesla. Okay. So Tesla right now is trading, 250 something, right? So I could be looking at something like options that expire September 2024. I don't love the pricing on them, to be honest, but I would probably buy something around the strike price it is right now, which is, we could say 250, 255. So I'd have to pay like $42, maybe $44 for them, somewhere in there, which would put my break even at about 210-ish. And this is kind of a viewpoint of like, in case the market dumps big, in case Tesla dumps big and the Qs dump big, either in the remainder of this year or at some point in 2024, maybe recession fears build, maybe maybe people get concerned about inflation coming back much stronger, and so the Fed's going to start raising rates even more than people expected, which is going to break even more things than anybody really anticipated and devastate the economy more in future years. Like you have some sort of those worries that would obviously weigh on Tesla stock heavily on top of what's going on with the business model. And then you could get some sort of potential where the stock goes down considerably in the short term and actually go ahead and take substantial profits. Because if Tesla was to move down to 230, 220, these options would appreciate greatly because of how much of a move they made in a very short amount of time, with still a lot on the option contract, right? Being that it doesn't expire until September 20th of 2024. So that would be a potential where I could move out of that and put that money into a new hedge, or go ahead and put that into shares of stocks I like for the long term, right? Which could even be Tesla potentially at that time, right? So you can kind of play it that way. So that's something I consider more is like a hedge, right? Because I am looking for another hedge or two for my portfolios before the before the end of this year, folks. So we got a very entertaining next several weeks in the market, folks. And I will be covering Tesla's earnings on Jeremy Makes Money, my new Twitch channel. So if you want to follow me on there, there'll be a pinned comment down there. You can definitely follow me on there. I'm going to be covering all the earnings this week and all the earnings over this entire earnings season. That show goes from about 12 o'clock to 1:30 in the afternoon. For Tesla's earnings, I might extend that schedule. I might do it later in the day in terms of like running the show longer. Maybe I'll do a 2 or 3 hour show that day, because Tesla sometimes lags in terms of when they actually put out their numbers, and there's going to be a lot to go through. So yeah, that's Monday through Thursday. I do that show on Twitch. So that will be pinned comment if you want to follow me on there and subscribe to me over there to kind of see everything that's going on. So appreciate everybody joining me as always, folks. And thank you for being here. Thank you for being subscribed. And if you didn't know, in my description area, by the way, I have 2 free workshops for you guys. These are in every single video. One's a workshop that basically helps a lot of newer investors, a lot of people that are in their first 3 years of investing. And the other one's a little more for advanced investors, how I find 10x stocks. That's a free workshop. That's a little more if you're an advanced investor. Those are absolutely free to access it. They're in the description area down there. So much love, folks, and have a great day.